Hey everybody, this is Gary Dean with Sentiment Timing, and this is our technical video report for Tuesday, February 18th, 2025. I didn't forget to put the report out today. I was actually putting it out, and there was nothing that was changing on it. So I'm going to go over those charts tonight with everybody and just show you what I'm seeing. But even with, today's little 5-minute burst higher, we have to really wait and see if there's going to be follow through tomorrow to see if anything has changed. So we had to wait since January 24th when we came up here. Made this, so basically it was 1 month and 5 minutes that it took the bulls to finally get above here. So this was, again, just algos, just getting to the new all-time highs, and I guess to say so they could. I'm not quite sure. It didn't really make a whole lot of sense to me, that 5-minute 15-point rally that we had. But in any case, I wasn't really expecting higher or low. I mean, I was expecting higher, but today I thought it was just going to be another dud day. And I actually, one of the trades that I did have in, it was getting a little too close to the close, and I closed it like 15 minutes before. No gain or no loss, and it ended up shooting straight up. So it's kind of par for the course with boring days. You just get you're not patient enough. But in any case, let's take a look at some things here. So this is a pretty well-defined bearish divergence we have here. So the pattern is bullish. This is bearish, but I still think I would anticipate them doing is if they're going to move up to these levels right here, I wouldn't be surprised to see them gap right up there and go from there. But in any case, another thing that I was going over was this gap to new all-time highs. And I thought that trade was going to be in play today because, we had the S&P that was up 24 points. It was going to put us well above these levels, and by the time the market opened, we did pretty much nothing. So it never gapped up to new highs, so that trade was kind of off the table. But in any case, let's go back and take a look. So this is a simple ABC move. We're just kind of tracking where a top could be, and if you just go A, B. So the distance from here to here brings us up to the 6180. So this is a potential upside target. On the downside, really, the bears are going to have to first get it back below the 6026. That's not really asking a whole lot because we're at 6029. But in any case, say this right here, I think this is a better, even that's not even that far. It's only the 6023. But in any case, below here, then we can see 6015. It's really, this is just today's trading. So this isn't really showing us a whole lot. To really start to get things going, they're going to have to get it through the 6073 level. If they do that, that's when we start looking down at the 6018. Now, if the bulls are going to continue to make a run here, really, it's kind of tough to say where they'll land. Like I said, I think my first three targets are the 6150, 6180, and 6200. Those are just, you have the 6150 midway through the round number, 6180, which I just showed you was the ABC move, and 6200 is simply a kind of a magnet type round number that the markets like to go to. So those would be the upside targets. On the downside targets, really, like I said, until the bears can get it through the 6085 level right in this support zone, it's not even worth trying to figure out where they're going to go. Once they get through it, then we can start looking at some downside targets. But you can see this move here most likely is going to give us a nice bearish divergence. So I'm expecting higher. These can drag out for quite some time. Me personally, I would love to see something like this take place because the type of trade that I got in, I took it for the end of the week, and it's just a way to actually, it's a lower risk as far as the amount of money you can lose compared to what you can make on it. It's a big ratio, and I just didn't think we were going to be staying in these. In this range, it just was people were just getting too frustrated. But in any case, I took it. It's not something I do. I didn't really deplete a whole lot of capital because, like I said, the way this is set up, it could go either way. It doesn't make a difference to me, up or down. But like I said, the way this is set up, it's not a whole lot of money that you need to do this. And if we end up seeing the S&P rally 100 points, it's going to be a pretty good profit that's going to be made. But in any case, like I said, we are going to have some bearish divergences, but these can drag out. So you want to just wait and see when we get some kind of reversal bar. So taking a look at our charts from the reports. So put call ratio, this has not changed because this is going from the 14th on Friday. It comes out at the end of day. But we're still in the area right here where it makes the long side, it's just dangerous. That's it. I'm not saying that we have to reverse from here, but when, getting extremely bullish, when the put call ratio is here, what it's telling you is that you're jumping on the bandwagon because everybody's really looking up compared to this. I mean, we had a really drastic low number. We've bounced, but my guess is we're going to be back down at these levels again. So, this really is useless. The NIAD hasn't given us any kind of feed. This is just a weekly channel again. Nothing. There was really not a whole lot that has changed on this. If it's going to go to the upside, 63.50 if it's going to follow the top of this. But we have a ways to go, and we have these bearish divergences. So, again, can we get up there? Absolutely. Would I be betting a whole lot on it? No, just because there's a lot of red flags that are being tossed out there. So, let's take a look at the VIX chart. That's right, my next one actually, let's do this. This is the 10-year, and again, I said, we got this little pop here that was right around last week that gave us these little dips here, but right now they're back down again. So if this is just an ABC pattern, this is where I believe that the 10-year is going to be going. It's going to be somewhere down into the 4.3, 4.1. And if that's the case, yes, you're going to see equities get some wind behind their sails on it. There's going to be no doubt at all. If it reverses and then we head back up, then we're going to see the S&P start dropping. But this is kind of just a parameter to look at. It's not something I trade off of, but I like to know where we are on things at all times. So that's following, that this is giving the bulls, a chance to get up to that 62, 6,300. The VIX, again, it's just another red flag because this is really where you want to be buying, say anywhere from here to here, and this is where what you call a semi-panic buy zone. And the reason why I say semi-panic is because when we had this, look where the VIX went. So this was all-out panic. But in any case, when it's down here, it can stay down here. Again, this is more just taking the temperature of where we are in as far as with the run. And we're just in the very complacent, be careful zone. We can look long on it. Like I said, I've been looking long with the S&P more than I've been looking short. But I'm not going to be complacent, and I'm not going to be, sitting there saying, oh, the S&P is going to be at 7,000 by the end of the year. I just think all that stuff is just stupid. But in any case, with the VIX being at these low levels and the call ratio being at extremely low levels here, it's just telling you that everybody is really bullish on this market. So let's go to, I already showed you that one, 60-minute, again, this is why I didn't even put out the report, because I didn't even have to change the short-term charts. So these lines have been in place since for really the past week and a half almost. So the bulls got through to 6,100. This is the next area right here, 6130, pretty much where we closed. To go above it, 6150, 6180, 6200. I don't even know what else there really, we have the 15 minute, nothing on that, I already showed you. And then the daily, again, nothing is really, nothing is really changing here. Sorry about that. Hang on one second. Okay, so we're at the top here. This is it. If we're going to remain in this range, then the bears would have to really pick up things and bring us back down towards the 6,000 level in a pretty quick manner, or you just have to, you're going to have to be like the bulls are in control. Don't even think about shorting until we get up somewhere into the 6180, 6200 level. So, as I said, they're really, I'm sorry for not putting out the report. It just was more, I was going to be a waste of time for you. So hopefully you don't mind that I did it all in the video. And stay open-minded for tomorrow. Me personally, I would really, really enjoy to see a 60, 70, 80 point gap higher. That would be really good for the fund, and I'd be very happy. But right now, we're going to have to wait and see what's going to play out. So with that, have a great night, and I will talk to you guys in the morning.